Hello, I'm Amrit and I'm the co-founder and CEO of Hyperexponential. Welcome to the Underwriting Intelligence Podcast. Today, I'm thrilled to be joined by Ben Gower, partner at Elixirr. Ben, welcome. To kick things off, do you want to tell us a little bit about yourselves and what you do?
Thank you. Yeah, my background is actually I tried to take your career path, Amrit, and I failed. So I started off in the actuarial team of one of the big four. I looked at the exam roster and the chances of successfully passing all the exams and decided it wasn't for me. So I then stuck out for a bit. Then I went and became a maths teacher, South London, for 5 years, and then I came back to consulting, joined Elixirr just over 10 years ago now to help build what we do in insurance. And that's been a fun journey. I'm sure we'll pick out different bits of that as we go. But thank you so much for having me.
You're very welcome. That's a really lovely segue into Elixirr itself. So Elixirr talks about itself as the challenger consultancy. I'm always really interested in the different types of consultancy that kind of evolve, right? There's obviously a very
Bad ones
thriving
and good
ecosystem.
ones.
Oh yeah, of course. Bad ones and good ones, big ones and small ones. But you've spent a long time at Elixirr now, and so as you were building out Elixirr, and you wanted to do something different, what was that, and what frustrated you, I suppose, with the legacy model of consulting that you really wanted to address?
Yeah, great questions. I am basically reaping the rewards of Stephen and Graham, our founders, having done this. I didn't have the same risk appetite that you did, Amrit, to go and build my own thing. So I'm in awe of people like yourselves and Stephen and Graham. But I mean, if they had spent time at a number of the best consultancies in the world and just decided this feels very transactional. This doesn't feel like a deep partnership. It doesn't feel like really giving the hard advice that sometimes you need to give a friend. And then doing things that result in being a mutually beneficial partnership. And I think my view is, especially in insurance, which is the world I'm passionate about, we've been my industry in consulting has been incredibly extractive. And we can talk about some of the things that I think should be nigh on criminal that we've done as consultancies, the advice we've given that's been incredibly self-serving, instead of, on the way, I was with my son this morning in the car. He's 5 years old, and he was like, "What do you actually do for work, Daddy?" And I explained it once. He was like, "I don't understand that," which is normally what happens when you talk about management consulting. So I tried again, and we eventually got to the following, which was, when people have hard stuff, we come and help them. That is it, right? And so that's what we're meant to do as consultants. Unfortunately, the industry has instead ended up being very self-serving, and that we're trying to be an alternative to that.
It's so interesting what you say, isn't it? And we're going to come on to innovation and transformation in a little while. But, I think a lot about the incentives for consultancy to tell someone what they want to hear. Right. And I think, I've worked in very large corporates with consultants for many years. As you say, I was foolhardy enough to be an actuary. And so I spent a lot of time, doing work, particularly in the regulated space where you bring consultants in to help for lots of reasons, second opinions, so on and so forth. Actually, it's very hard to balance we're here to give you some help. But once we set the boat kind of sail, right, we're on the journey now. So I think it's really interesting to reflect on that, because actually it's a fundamentally hard problem, right? The kind of alignment of incentives problem.
And incentives is a great place to start, right? If we come back and we talk a lot as a business with clients around how do we deliver the results we all want, fundamentally we're both in the results game. The results that I personally want are around transformation of the insurance industry and being part of that and feeling a huge amount of personal pride. There we go, in that. But that's not the way that you're then necessarily remunerated within a consulting model, right? You're remunerated based on the fees you've charged. We do quite a lot of risk rewards. So actually we try and align incentives that way as well, or we do kind of JVs and things like that, which far better align it. But a big part of it comes down to the DNA and the culture of the people, right? So for us, what we're trying to drum into our teams, the people we recruit, people that we are as a partner team, is actually having the belief that the right advice over a long period will be better for everyone. I'll give you an example of, it's one of Europe's biggest ERP implementations that we were asked to pitch for, and we pitched for it, and they said, "You didn't follow the approach we asked you to do." And we said, "That's because the approach won't work." And they said, "Well,
Good for you.
didn't approach. You're not going to do it that way. We don't want to work with you." So it's like, okay. 2 years later, they rang us up. They said it hasn't worked. I
Yeah.
won't tell you how much money they'd spent by that point, but they were like, come and help us fix it. And
Yeah.
ever since that experience, I've felt more confident just to say it how it is. And
Yeah.
then what will be, will be. And, we're not trying to be the biggest consultancy, we're trying to be the best one. Right. And
Mm.
so I don't, and I won't go into all the clever stuff that Steve and Graham have done around our remuneration incentives, but it means that we're focused on creating a team of entrepreneurs and owners that are focused on, back to what me and my son were talking about in the car. How do I help people with stuff they find hard? How do
Yeah.
we build a model that means that that's what we're focused on?
It's so interesting. I wonder whether you can say anything just based on your experience of the different personas of clients, because I think one of the experiences I've had in the market is actually, I often think that, clients have an OpEx budget of some sort that they need to deploy. And actually, for whatever reason, the interface between the client and vendor can mean that the client almost doesn't even want you to have the aligned incentives. It's like, I've got a time and materials budget. I got to pay you for that. Like, that's the thing that I really care about. It's almost like they're scared at the prospect of things going really well, right? And you're having to pay more, even though things have gone really well. Like, that's a net benefit.
Well,
Don't know.
and that is the result of, whenever we say we do risk reward, the business person's normally really keen and they're like, sweet, amazing, that we're going to align on this, blah, blah, blah. Once you hit the procurement lens, it's like, what, we might pay, like, we don't know how big the upside is here. You're like, no, because this thing could go really, really well. And then it gets shut down. I mean, that's why, like, I really love, and personally, that's why as an organization, we've gone down the equity model for all our teams, is that people are actual owners. It creates an incentive structure that's around the value of that business itself. I can tell a bit of that story a bit later of why that's been important in our journey and how we recruit in the DNA, because, and actually there's something there as well about the connection with the insurance market, and where we probably do 8% of our work in specialty reinsurance and commercial, which is incredibly entrepreneurial. You are basically trying to help people be covered for stuff that's changing all the time and getting worse or better, or, you just go back to the sitcos, right? And what industries are now really big compared to 30 years ago. Like, the risks are just different. And so that entrepreneurial lens, I think, has really helped us, because we've got a team of people that are trying to be entrepreneurs as consultants, trying to find problems to solve and be helpful, with an industry that's constantly trying to do the same with its clients. And so it's a really good mix.
Yeah, it certainly is. It's a very nice segue, actually, because that's how we've ended up working together. I think, because clearly Elixirr and you have carved out a space when it comes to kind of the more forward-looking transformation aspects of consultancy. I'm super interested, you've seen some really mega ones now, right? Like, when you see digital transformation programs in insurance, like, when do they fall short? When did they do really well? And how do insurers bridge the kind of strategy execution divide that, like, can very quickly end up, like, can kind of very quickly open up? Because the planning phase is the glory phase, right? Like, you dream big, you look into the future, you describe the
Business
parallel
case
universe.
looks great at that point.
Business
Yeah.
case looks wonderful, right? Like, the PowerPoints are beautiful,
Yeah.
but then actually the rubber hits the road, and that's the hard bit. So what have you seen go wrong, and maybe go right as well? And, like, what are the tips you'd have, I suppose?
Yeah, I love debating this and discussing it. I think I'm also fascinated, and we got asked this by a client a couple of months ago. It's like, is there something especially bad with us as insurance industry compared to banking or whatever it is? I actually think there's something special about insurance that makes these transformations really hard. And we could go through a whole list of, standard stuff, tail wagging the dog, tech, for all that kind of stuff. We could talk about that, but in the reflections we've done the last 3 years, and we've really pivoted how we've approached transformations in that time, there's an element here that for a year and a day, we've been doing, the way to get results is to change how people act. So we've got to get them to adopt these technologies and do things differently and blah, blah, blah. And instead we missed for a long time, and I think most organizations still miss, that if instead you start with a mindset that people have, the actions change dramatically and the results change dramatically. And so we believe this is even more important in the age of AI, that these individuals' jobs, what they turn up to do each day, is going to change. Unless you help them go through that mindset change, They ain't going to change the behaviors easily, and they ain't going to change the results of your company for the better either. And my favorite example is, we're really lucky, I think. I mean, this tells you how long this hype thing's been going, right? So 2.5 years ago, we've been asked to do a kind of 2-hour session at the strategic broker conference of one of the big global insurers. We did these for the big global brokers. We did it for the regional ones. We went around the whole UK doing it, me and Steve, who leads our AI team. And I remember one of those when we demoed, it was a simple RAG solution, but 2.5 years ago, it was, best thing since life spread, right? And one of the CEOs, I won't say which broker it was, stood up and said, "This means my job's gone." And all we'd shown was them basically summarizing what a policy covered them for. And so I said, like, with all due respect, if your job is summarizing someone's policy, yeah, your job's gone. But last time I checked, that wasn't a broker's job. The broker's job was to help them manage their risk and get the best cover they could have for what they wanted to get covered in the market. And that still isn't done by just a machine. And actually, the way that all of this stuff is still set up, which is largely backwards looking, it's going to be very hard for machines to get that right in the way that things are changing, even the way that technology is changing. So that for me, the mindset bit's been our biggest learning curve. We could go through all of the specifics, but there's also some just great books out there that also articulate this stuff. So yeah, that'd be my biggest thing.
No, I love that. I love that. So, I'd say I'd be very excited to co-write a blog with you on the 5 failure modes of transformation. I think that would be a very fun thing to do. I can already see the images of a tail wagging a dog as one of them, which I love. But that's a whole separate podcast. The phrase you said that stuck in my mind, which is just a wonderful soundbite, which is that actions are downstream of mindset, is so powerful. And I think, it really resonates with me in this kind of AI era today, because often when I talk to clients, one of the challenges they have is the rate of change of AI itself means that they're continuously playing this Red Queen problem of trying to stand still. And the thing I say to them is, if you look at this as a skills accumulation problem, then you will never catch up. Like I'm a software engineer and an actuary. I immerse myself in these tools for more hours in the day than I would ever admit to my wife or friends or anything like that, right? And I can't keep up, right? But what you can do is change your mindset to be more experimental, more iterative, to be comfortable with things, but having a much shorter curiosity. But the big one, which I think is one of the most important things, which I think insurance companies find very hard to do, is to be much more comfortable with a very short time horizon.
Yeah.
Right. It's like a much shorter time horizon than you've ever seen before, because, people love a 5-year transformation. They love to put a graph on 2026, 7, 8, 9, the accumulated value over that time.
Do they love them? I think the consultants.
They love to make the graphs. Well, maybe the good point.
And I like the vendors love them because it's, they're just seeing dollar signs. I don't think that actual frontline underwriting pricing actuaries, they don't love that. They're massively skeptical of it, right? And I think there've been so many examples of, we promised this thing and it didn't happen for 10 years after it, or it never happened at all, that I don't think that's true. I think what's true is we assume that we have to do stuff in a massive 5-year horizon.
It's a good challenge.
Actually, and this is super cheesy, right? I put this on our Teams chat as a insurance leadership, and no one responded to it, which tells you that they were like, I can't put a thumbs up to that, which tells you it was really bad.
Not worth the risk.
No, exactly. But we're doing a lot of thinking, actually. We had some workshops with your team, Amrit, as well on this. And where I've landed is, if we were to think about building from the heart of insurance, what does that mean? Well, that means we actually build out from, and this is coming from a company that for years and years we're build from the broker and the customer experience. I'm not saying that goes in the bin, but the heart of insurance is how we price risks, right? And what we think we need to do to cover that risk. Ideally in the future, also we get better and better the prevention stuff as well. So
agreed.
Again, let's pause on that. I'm not saying it's not important, but the heart of what we do is about that pricing, the underwriting stuff. So totally if we were to zero in on that, what does that then mean in terms of the investments we make? Well, it means we want to connect up our pricing teams better to our underwriter, better to our data, better to our IT teams. And I won't count the number of insurers I've sat down with, and we've done a kind of pricing transformation initial kickoff workshop. It's had those 4 teams in it: IT, data, underwriting, and pricing. And we've said, how many times have you been in a room together? And they say, never. And that's the problem, right? And it's
Yeah.
actually, if
Yeah.
we got those four groups in a room more, and if we said, what would make all your lives better, we could find some solutions that we can roll out in 6 months. Probably some
Yeah.
things we could change today that change tomorrow.
Yeah.
But we don't. We start with the operational parts, and then we're
It's
like, we
so
need a
true.
massive admin system. It's going to take us 10 years. You're like, don't start there.
Yeah. Yeah. I mean, again, I feel like episode 2 is already writing itself here, but I think, it's so interesting, that side of things, right? And, isn't like insurance is a marketplace, right? And so when you think about the dynamics of all the stakeholders together, right, that's actually the only way that change can be affected
Yeah.
at scale,
Yeah.
right?
And I think that's my answer to the insurance versus banking, right? You can't
Yes.
win in insurance unless you're operating as a team, because if you've got crazy leakage in claims, doesn't matter what you selected up front, you're still going to lose. And
Yeah.
that team sport is why I really like it. And I think it's why it's so hard for digital transformations to really be effective, and why
Yeah.
you end up trying to boil the ocean.
Yeah, it's true. Very, very true. Well, why don't we take the optimistic side of the story and think about the ones that go well? So, when you see it, I'm biased, but I'm particularly interested in the insurtech angle.
Yeah.
So, when you see insurers engaging with insurtechs, like what really stands out when it's going well? And I'm also really interested in, because often as a consultant, you get pulled into this pilot phase, right? And I'm really interested, again, I'm kind of riffing on the mindset thing you said, but like, when do you see, what are the foundations of a real partnership that delivers value versus kind of a pilot?
I mean, the first one is all about honesty, right? Like, you have to be clear. And I give an example of what we're doing. We're, again, really lucky that we're working with one of the big carriers in the UK, and they've asked us to chair the meetings between them and their brokers. Their annual strategic meeting, we sit in the middle of, and we challenge them to try and get the best out of it. And what we do in that meeting is we say, we could sit in here and we could talk about initiatives and activities. I don't want to do that. What is 2026 in terms of predictable success, and then absolute breakthrough with shot the lights out success? Let's talk about what that looks like for each of you and where those things join in a Venn diagram, because then we can do some cool stuff together. And I think the same thing applies if you're looking at technology, right? And I remember, again, a session that we had with yourselves and one of the global carriers, and you have to get beyond just a normal, we're trying to sell to you type thing, to an actual, look, we both want to learn from each other here, and we both want to go and create something special. What would it take from both parties to get there? And my experience has been that if you don't have that conversation up front, you end up with lots of big issues later on. And I feel that part of my job in the last, especially 18 months, if not longer, has been helping insurers to spend less money on tech because they ain't ready to spend it. And actually, like, look, just stop. You got a million things on. Does this thing actually move the dial or not on your COR or your return on capital or whatever? If it doesn't, just stop doing it. Like, don't spend the money.
No, and it's so interesting because the pressure is so high at the moment, right? There's this zeitgeist out there, and a lot of keeping up with the Joneses, right? It's almost like like Instagram best life, but for tech execs,
That's
right?
exactly,
They have to say, look at this AI project I've done that's crushing it, so on and so forth. And, it's interesting you talk about spending money because I have a phrase at HX, right? And I think the team's very well known for this, which is, I say, like, do not pour fuel on a fire that is not burning, right? Like, that's just like really, really important. And when I look at the failure modes inside my company and actually in other places, it's where people have scaled something that actually isn't ready. And it's just so interesting, right? That just the natural tendency for people to do that when there's kind of this broader, oh gosh, I must do something, right? I must do something.
So Amrit, I nodded along there, which is what I normally do. But when you say pour fuel on the fire, what do you mean by pouring fuel on the fire when it's not there? Just help me understand.
Yeah, so often there's a project or an initiative, and we don't feel a very high degree of conviction that it's going to work. But what we do is we feel the pressure to get to the end. So then we start scaling it. We say, well, I've tried that for one team, right? I'm going to try it for 4 teams. I'm like, oh, if it didn't work for the first team, if we're not sure it's working for the first team, spend more time there, I mean, and then we scale it.
What's been your experience of people being willing to admit failure, and that's a positive, right? Because I don't know if it's universal. It's definitely not universal, but for a lot of our clients, they've really struggled with that culture of it went up to the board. We said we're going to try this thing. If we try and it doesn't work, there's a problem. You're like, but you said you were just trying it. Like,
Oh, yeah, I mean, you're absolutely. I mean, this is a perennial challenge. I think, the the challenge of leading and lagging indicators is something that I think isn't applied well enough in transformation projects in general, right? The vast majority of the indicators that are tracked are lagging ones, right? Whereas actually, and I have this like I'm a notoriously inputs driven person in general, right? Like I really believe in tracking the effort and focus and capacity and intensity you put into things. Jeff Bezos talks a lot about this. I've had to learn how to be a CEO at like very fast pace, having been an actuary for more of my career than I was a CEO. So being the kind of bookish person than I am, I learn a lot this way from reading. One of the things people say is like, if you don't actually really reward people just for trying things, then all you will do is get exactly the things that you want, but nothing extra. Right. And I think the same thing applies with respect to these projects. Like if you only track the whether something has succeeded or not, well, your outcome is very binary. Whereas if you track the things that people did and the other things you learned as well, right, you actually all of a sudden have a very rich plethora of possible things that can come out of that. And that's a very hard thing to set up because generally you've got some harried executive, right, who's like, well, I need this project to succeed. And then all of a sudden it becomes very blinkered. And I say that as probably one of those harried executives saying stuff to my team too, right? So it's a fundamentally hard problem, but creating that environment where people get rewarded for trying things, and that's a measure,
it,
right? Number of things tried.
I think it's part of the death of the command and control leadership approach as well,
Mm,
which has run our industry for decades. I think it's on the way out. And I think one of the
mm,
reasons it has to be on the way out as well is because if you look at, you talked earlier about your adoption of AI tools, right? Like if you, we want 90% of people to be using whatever tool it is this much each day, it's completely the wrong way to be approaching this and tracking that. It doesn't work. We want to make sure that people feel valued and that we want them to experiment and try stuff and be curious, and they have the ability and the permission to do that is how you then get there, right? And I think I have my challenge on the kind of like tracking effort and stuff is it still has to deliver the outcomes. Yeah. And I think that, in at the mid tier and kind of the people doing the real work in our organization, yeah, we measure that. But I'm really clear on the senior people that this is all about outcomes, primarily the client outcomes. Like I'm expecting you to scope a project that will deliver a 5x return on the investment that client's making. Otherwise, they could probably use that capital somewhere else. We have to start from that mentality. And as the senior leaders, we have to keep accountable for the outcomes. And
totally.
yeah.
Totally. That balance of both, I think, is so key, right? And I
Mm.
think, just setting up structures to assess both. Often the leading indicators can just be good early warning signs
Yes.
as well,
Yeah.
right? I think it's so interesting, isn't it?
Yeah.
Yeah, super cool. Okay, let's take a slightly different tack now. This was one of the most really interesting stories I saw, so I'm super excited to talk to you about it. So Elixirr bought an AI company, Responsum, right? And I'm really interested. I was going to say last year, but I think it might be just about. It's now 2026, so we'll go back more than a year ago. I think is possibly the case. So I'd love to hear about that. I'd love to hear about the motivation, and then I'd love to hear about what it's been like, kind of bringing those things together, both the companies together.
Yeah. It's a really fun story. I mean, Responsum were the 5th acquisition we've made in our journey as a company. So, I go back to what I said at the start around Stephen and Graham believing there's a different way, a different approach to consulting. And, that has always been rooted in our DNA and our culture and kind of the entrepreneurial nature we think it needs to have and the client first, outcome first approach. The AI and the Responsum investment was actually probably a bet that's been going 6-7 years now. So we made the call in 2018, 2019 that if we aren't technical as a company, we ain't gonna have a future. Like this all comes down to, and I thought about this the other day. Do you remember when people used to say that data was the new oil? Like, anyway, I'm not going to say that phrase again, but we just realized if we're just going to be a Excel PowerPoint monkey outfit, we ain't going to be able to solve the boardroom issues that are what we exist to do. And so we actually, we IPO'd 2020, first company to do that in lockdown, which says a little bit about our approach and our kind of make sure it happen mentality. And with that capital, we doubled the size of the business by buying a company called iLab, which had 250 data engineers, data scientists. We'd worked with them on projects. We liked them, the great DNA, combination of fantastic nearshore teams and US, UK based teams as well, right? And so that was our first big bet into like we have to play in this space. Responsen were carved out of that deal.
Wow. Right.
We didn't bring them in because they were
Okay.
selling software. And we wanted to remain a services company.
Hmm.
Now, we actually ended up, I'll need to check my timelines. I think this is 2.5 years ago. And I mentioned Steve earlier, right, who did the broker sessions with me.
Yes.
He was the CEO of Responsen. So
Right.
he's now our AI lead. Me and him talk every other day, basically, right? He's a great guy. And we'd carved that out, but we ended up doing all these RFPs for like agentic AI going back 2 years ago or so now. And we'd always put Responsive in the mix, partly you feel like you got to,
Yeah. Yeah.
And they kept winning them. We were like, damn it, what do we do here? So then we were just like, well, just buy them. We bought them. We should have done it earlier, but we bought them then. And then we thought, do we keep the platform they developed? I mean, the team, they're amazing, right? Like they'd been involved in Amazon Elixirr back in 2015, 2016. So like serious conversational AI, like experts, right? They'd started working with LLMs back in 2019. And they had this amazing, just amazing set of skills and experience. So we brought them in, and then we made the kind of probably not necessarily hard. It's hard from an emotional perspective to be like, we think we should just mothball the product and actually just not sell the product. And we think we should instead come alongside clients with that engineering competence, people that have used these tools for now 7 years, whereas everyone else has picked them up in the last 18 months, and help them use these tools effectively without generating vendor lock-in. So that's what we've been doing for the last 1.5 to 2 years. So embedding it in workbenches or getting people's tools they've already created. I mean, insert insurer's name and GPT at the end, whatever it is, get the accuracy rate of that up, make it so it's agnostic of the LLMs. All that kind of stuff is what we've been focused on doing now, because we just felt that there was a gap there of actually coming alongside. And again, it's actually really back to the DNA thing of being a good partner. Like we could flog you this product and all that kind of stuff. Like, but actually what you need to be is agnostic of these vendors. We need to work with you to create the muscle internally. And we have the desire to do that. Whereas, there's very few other consultancies that want to do that because they've all got their own thing they want to peddle and that they want to sell.
That's amazing. And it's very courageous, right? I think, it takes a lot to go, wow, I'm going to shutter this thing that's working and repivot the talent. I don't know, you've probably seen the forward deployed engineer craze at the moment. The idea that you take these engineers and instead of getting them to build a product, you get them to get into the customer's world and help them solve the problem, which is more integration and patching product gaps. And in many ways, you kind of front ran. You saw that earlier. It's been given been given a name, and all the salaries are going through the roof. So every person in their dog is now a forward deployed engineer. But that's so interesting.
But that's also the question you asked earlier on successful insurtech type engagements, right? Like, what we're looking for when we're trying to broker that and enable that is to get those engineers in the room with the client as early as possible and not have the sales team in there. That's the key, because then you're already collaborating. You're seeing the people you're going to work with day to day on this thing. Do I trust them? Are they good enough? Do they know what they're talking about? Do they know my system's good enough, well enough? Can they work with my data? Like, get that in there before you got a contract with them, basically, because it's the best way to safeguard it. Make sure you're entering into a partnership with the right people.
Yeah, that concept of shifting the team left, right, is just so valuable, so valuable. And yeah, I think one thing you've said there is you get a very powerful selection effect where when you engage with clients who are very willing to do that, very willing to have a technical conversation really early and talk about that. That's just like setting the boat on the right direction, to use the analogy a lot. Are there any other lessons, I suppose, that you would share? I suppose you've got this fascinating situation because you've had to integrate the team internally, and you're also helping a kind of mirror challenge externally. So, like, I suppose what's from the skin in the game that you've had from this would you share externally? Just terms of the cultural side, I suppose, if nothing else.
Yeah, well, I think that we're lucky in the way we're set up. We're talking about incentives, right? And I think you can say a lot of nice marketing stuff, but ultimately, the fact that the different capabilities within Elixirr aren't competing with each other, and the individual partners aren't competing, and that we aren't siloed. The bit that's made it really easy is like, keep talking about Steve, right? Me and Steve work super closely. We've got no internal impediments to that, and as a result, it's still the client outcome is just coming first. Whereas I think my experience, I mentioned coming from Big Four and the other partners that have joined from there has been, we're spending so much effort on our internal inefficiencies and competition. Whereas what we get to do now is like a combined capability of amazing people from our insights team, of people from, and across geography as well, right? We resource on a global basis with the best people. We don't have competing geos. We don't have competing like capabilities. And that's part of the magic of what Graham and Steve have set up. That means incentive wise, we are client efficient rather than internally efficient. And yeah. And I don't know if I've answered your question at all, Amrit, but
no, you have. I think you really have.
Okay.
I think that, the amount of frictional loss inside companies can be so high, right? And I think it's very interesting, isn't it? Because sometimes the things don't succeed, not because actually the people aren't good, the capacity is not there or anything else, but the inefficiency comes from frictional loss, from teams not working really well. It's often hidden. What humans don't tend to do is go, I really don't like that guy, so that's the reason things aren't going well, right? And so I think it's been a really interesting point, right? Because when you think about actually having teams kind of, if you think about the problem you mentioned there of actually making sure the different humans who are actually bringing these solutions together to market or to the customer or to the internal customer together, right, come from different worlds, and actually, you need to solve for that first. It's a very like obvious but hard thing to do.
And you've just made me think, actually, like translating that to the client problems we're often trying to solve, especially global carriers, reinsurers, brokers, etc. It is, I've got a global tech function, ops function, whatever. I'm a UK specialty line of business underwriter trying to make this thing happen, and it's the same problem, right? But it's just within our kind of client space. Like the other thing that I think is really cool as well is we've been doing all this AI stuff to ourselves. So I'll give you an example. And we mentioned there about getting on. Like one of the things we have as an operating rhythm as a company is our partner team meet in person every 3 months. And I told some clients that, and they're like, "Am I paying for that?" Like that's ridiculous overhead. But the reason we do is because we want to like each other and spend time in each other's company, know how our kids are, and it makes a huge difference to seeing my colleague on the west coast of the US who's then working on something that's exactly the same as something we're working on over in APAC. And it's like, we would never know if we hadn't sat at dinner together and had a chat for a couple of hours. And it makes a massive difference. And what I loved about that is having Steve and Adam there, who lead the AI team. I mention about Steve all the time now. But the first couple of times they came, one of them, they were like, everyone's like, "Oh, why haven't we got all this AI embedded already? Like, we should be able to know all these projects." And I remember Steve, the CEO, was like, I went into the tool and I typed in this client's name. It didn't come up. And Steve was like, "Of course it didn't come up because our file structure is an absolute nightmare. Like, I'm not putting crap data into this thing." And so between when would this be? October and November, every partner had to click on the final deliverables for all the projects from their last 5 years and certify that was the right final deliverable. It's the only way we could, and it was AI. Like they were put up by AI to be, we think it's this one, we think it's that one, but it was human in the loop, accountability back to the partners. Is this the correct deliverable, so that we can create the knowledge base underneath that? And it's the same thing for our clients, right? Like when we're told, "Oh, AI will do that," it's like, on what data, with what intelligence, with which human that's accountable for its accuracy? And those three questions have helped us get away from the magic wand of AI to actually, no, if you want to make this happen, those are three hard questions you're going to have to answer.
Yeah, yeah. That's wonderful. I suppose, the takeaway there of eating your own cooking is just an incredibly powerful message and an awesome way to wrap up because we're at time. Ben, thank you so much for coming on the show. That was a cracker.
I loved it. And thank you for just inspiring the work you and the team are doing. We're loving how you're transforming insurers. So it's great to be part of that journey with you.
We're very appreciative of that. Thank you so much.
Pleasure.
That's it for this episode of the Underwriting Intelligence Podcast. I hope you found it useful and thought-provoking. If you did, don't forget to follow or subscribe wherever you get your podcasts. And if you know someone in insurance who'd find this valuable, please share it with them. I'm Amrit, and I'll be back in 2 weeks with more insights that matter in the insurance world. Until then, thanks for listening.